Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Wednesday, September 4th. In this episode, a recap of the August markets. Then, we'll review Tesla's performance in China. And finally, beef with Disney and DirecTV that'll have sports fans anxious. Happy September, everyone. Let's talk about last month, because it was a wild month in the markets. Remember, August started off with the stock market freaking out because of the overall economic uncertainty and the yen carry trade unwinding. That caused a mini panic attack. And markets all over the world had their worst days in years to start the month off. At one point, the S&P was down 8%, and the Nasdaq was down more than 10%. But then, the markets rallied, and both the S&P and Nasdaq finished the month in the green. In fact, the S&P ended up posting a 2.3% gain for the fourth winning month in a row. But now that September is here, some investors might still be on edge, because September is historically the worst month for the stock market. The S&P declined about 1% in September almost every year since 1928. What's weird is that September happens to be the second highest month for trading volume. Who knows, maybe the positive momentum will continue through September because there is a lot of political and economic factors that could impact the markets. Earnings season is over, but we still have the Fed meeting in a couple of weeks. There's a presidential debate happening next week, and we're also getting economic data like the jobs report, which comes out on Friday. So we got a busy month ahead. Anything can happen. Let's run through some headlines. Tesla just reported their sales numbers from China, and they had their best sales month of the year. Tesla said it sold more than 63,000 vehicles in August. That's up 37% from July. But if you zoom out and look at how Tesla's competition in China is doing, it kind of shows you why Tesla has faced some difficulties in the market. BYD is the largest EV maker in the world, and they have a monthly high of 370,000 vehicles. There's levels to this game. But don't count Tesla out just yet. They've been making some adjustments to help boost their sales. They're offering zero-interest loans up to 5 years, and Tesla is also planning a new 6-seat variant of its Model Y car in China. Labor Day weekend is significant for sports fans. It's week 1 of college football, you got the US Open, and the NFL season starts on Thursday. But this last long weekend, sports fans couldn't watch any of it because of a dispute from Disney and DirecTV that resulted in Disney pulling all of their channels from DirecTV, including ABC and ESPN. So that means the 11 million DirecTV subscribers couldn't watch the US Open or watch college football. Disney and DirecTV agreed to a distribution deal back in 2019, and it expired on Sunday night. And because they couldn't reach a deal, Disney just decided to pull their channels. Disney thinks that DirecTV isn't paying enough for its content, but DirecTV, on the other hand, thinks that Disney is charging way too much for its content. I love it when companies are petty with each other. DirecTV's chief content officer said that Disney's only magic is forcing prices to go up, while simultaneously making its content disappear. This is the second year in a row that Disney found themselves in a dispute with a cable company. Last year, Disney pulled all their channels from Charter right around this time as well, but they did eventually agree to a deal like a day before Monday Night Football. So maybe the same thing will happen with Disney and DirecTV. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Shares of Southwest Airlines are up this morning after it was revealed that hedge fund Elliott Management now owns 10% of Southwest Airlines stock. This stake allows for them to call a special meeting to change Southwest's current leadership. It's rumored that they want the CEO and the executive chairman to be removed because the company's stock has lost more than half its value in the last 3 years. They don't like the way the company is being run right now, and Elliott Management wants to nominate 10 board of directors to the airline's 15% board so that way they can make some changes to turn things around. On the flip side, Boeing is an early loser this week after Wells Fargo downgraded the stock, dropping the price target from $185 to $119. On top of that, Boeing could also be dealing with a potential strike with union workers that represent about 20% of Boeing's workforce. So Boeing has a lot to figure out right now. Their stock is down around 7% in the pre-market in reaction to this news. That's all for today's show. Keep navigating those waters and see you tomorrow.